Good evening. Today is Monday, March 13, 2023, and this is the 141st episode of New Paradigms. I'm your host, Sargis Sangari. Before we begin our podcast tonight, a quick word from our sponsor, Epoch Times.
We are being censored. America's news outlets no longer provide the truth. 90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. The Epoch Times is independent. We're not controlled by any special interest, and we never will be. This is a battle between truth and deceit, a battle between forces that would ensnare this country in ignorance, and between a media that wants to present you with the truth. Subscribe today to our digital edition at theepochtimes.com and join the Americans who are seeking truth and tradition. Read The Difference on all your devices. We'd love to have you on board.
My guest tonight is my dear friend Ron Reece. Ron is coming to us from Indonesia today. Ron is a former Army Intel, HUMIT, and also counterintelligence soldier who enjoys connecting the dots, or what we say, the dots of information in our business, or link analysis. Ron was a Iraq Survey Group analyst, a counterterrorism analyst, and he served wall downrange and the task forces at the J2X level. In the civilian life, Ron is an equity trader and also financial analyst. Ron also was an individual who connected the dots on May 30th, 2020 between Dr. Zelenko's protocol and also the top U.S. virologist, Ralph Barrett. Ron is here today to discuss the global fallout from the banking collapse and also the geostrategic consequences of the U.S. banking crisis. Ron, it's good to have you here. I know you're in Indonesia, and you got some of your friends back there chirping on your behalf today.
Yeah, it's kind of a calm, not too hot in the morning here in Indonesia. About 12-hour time difference between us. So, but anyway, it's good to see you again, Sargis. Good to be on.
No, it's good to have you here, Ron. And I got to tell you, it was amazing. We were just talking last night when everything was collapsing, and I know that you're down there Indonesia looking at the business aspects of the global effects, and I thought it would be a perfect time for us to talk. Before we begin, just for our audiences though, Ron, I do want to start off with a short video as to what happened, and then we'll continue our discussion.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
The Silicon Valley Bank collapsed on March 10 after a run on deposits doomed the tech-focused lenders' plans to raise fresh capital. This prompted U.S. regulators to step in with emergency measures, including seizing another bank 3 days later, in a bid to ease fears that depositors might pull their money from other lenders. WSJ banking reporter Rachel Ensign explains how this crisis unfolded and what could happen next.
During the pandemic, Silicon Valley Bank had gotten all of these deposits. Their deposits tripled. It was a huge influx. And they did what banks do. They took some of the deposits and made loans, but they also invested a lot of them in securities, which are pretty safe. Some issues had been bubbling under the surface at Silicon Valley Bank since the Federal Reserve started raising rates. When rates rose, the bonds fell in value. It's not a big problem for you unless you have to go and sell the bonds. But deposits started leaving the bank faster than they anticipated, and they had to sell their bonds and take a very big loss. The bank made an announcement on Wednesday night that it needed to raise capital and was planning to do that the next day. The investors completely freaked out, sold off the stock, and then a bank run started where people tried to withdraw $42 billion in deposits just in that one day. And by Friday morning, it was seized by regulators. The regulators have responded in a way that they're hoping stems the panic. The Fed said, we're going to be offering this lending facility that's a backstop. We're going to be ensuring all of the deposits effectively of this bank that failed. The collapse matters because it could have broader economic effects. There was the risk that this panic would spread to other parts of the banking system. We saw some really significant news with some of the banks that investors were most concerned about last week. Most notable, Signature Bank, a New York-based bank, was also seized on Sunday night. It is the third largest bank failure in U.S. history. And First Republic put out a statement saying they'd gotten some extra money from the Federal Reserve and also from JP Morgan. They're hoping that that reassures their investors and their depositors. The key thing to watch for is the panic over? That's the big question. Do people stop pulling their money out? Do investors and customers are they reassured in the way that the government would like them to be?
You know, Ron, it doesn't matter how strong a bank is. If you conduct a run against a bank, guess what? Any bank can collapse. But you and me had talked, and I know you pointed it out almost going back months ago. I would say maybe even a year ago that we might be at this point. How did we get here, and where are we right now, do you think? What are the geostrategic effects we got to deal with?
That's a complex one. With regard to the banks right now, I think a lot of blame can be laid at the foot of the Federal Reserve. They were late to start raising rates in the face of growing inflation concerns. Maybe they didn't want to pop the stock market bubble, but lo and behold, now they've done it. When they started raising rates at one of the fastest paces in financial history, as the lady from the Wall Street Journal stated, a lot of these banks had been holding low-yielding bond portfolios. When the yields were crushed because of the pandemic response, they lowered yields. They lowered bank reserves to literally zero. So banks don't have to have cash reserves against their liabilities as they had in the past. So now suddenly raising the rates, their bond portfolios are losing money on paper, mark to market, which is where even if you still are holding the asset and you're realizing a loss on something, you have to declare that loss in their trading accounts, if your viewers can understand that. So we're sitting at, I've been told 630 billion in total, total unrealized losses that the banking sector has to take because the Fed raised rates so quickly.
Well, I mean, look, they were even talking about just a week ago, the Fed chairman was talking about possibly having to raise it again because of the inflation issue. And some had talked about maybe going up 75, points, really, as far as the percentage is concerned. Right now, I don't know if they can even go anywhere because of the massive hit that the economy is going to take. And look, there were issues within the bank, SVB itself. I know that it was kind of a unique niche for it as far as the type of loans it gave out. The other piece that you're looking at is specifically that didn't have anybody who was sitting in their risk management side of the house for almost 8 months. You can't leave something like that vacant and expect that the bank is going to be viable. What are some of the things that you've heard about what's happened to that? What's the difference between that and Signature Bank?
Well, again, I think unrealized losses and the people that are really following the assets and liabilities of these companies much closer, all it takes are some whispers out there and people in the big investors, the big depositors start pulling their money out, and that makes it even worse. So with regard to the interest rates, though, I think Goldman Sachs has probably got it right. They're saying that the Fed's not going to raise rates. And the reason I say that is because the federal funds rate, which is the rate that the Federal Reserve sets to try to overcome inflation, they follow the 2-year Treasury yield. That's a little known fact. And so as long as the 2-year Treasury yield is higher than the federal funds, the Fed pretty much has to follow the market. But just in yesterday, there was a huge turnaround in the 2-year yield where it went down below the current Fed funds rate. So some people might say that indicates the federal pivot, back to lowering rates or keeping rates stationary at this level. But that's a big one right now to look at. So they may not raise rates this next. But again, tomorrow we've got CPI data coming out at 8:30 in the morning, and if that's hot, then guess what? You're going to see a lot more turmoil in those rates.
Well, I guess my question would be then, how are you dealing with the inflation issue? Because, how are you going to counter the inflation? I mean, where are we now? Are we in a different type of a mode that the Fed cannot continue as is done in the past? Or are we looking at a different type of a process for future banking and how you could basically fight inflation at the same time? I mean, literally, if you're going to take all the money you have and say one bank, I don't think we get that much assets, especially if you global banks start failing. Do you honestly think that the current administration has players that can handle an issue of a global collapse?
No, right now, I mean, the Federal Reserve supposedly has this ability to create reserves and do currency swaps with other central banks. And that's another issue we can get to in a second. But I saw a story the other day. It was funny. They're saying that Ukraine pretty much now has more money than the Federal Deposit Insurance Corporation. So maybe we should go to Zelensky and ask him for a bailout. I don't know. But it's correct. They've underfunded the FDIC. And now you've got huge banks. SVB was 171 billion in assets, and 151 billion of those were unsecured. In other words, not covered by deposit insurance. And so they just suddenly made them whole. So where'd that money come from? Coming from the Fed and the Treasury Department.
Yeah. And it's in the billions. So I mean, I still don't understand how the Fed is going to be able to not raise interest rates while we're doing that as far as bailing out one bank. I mean, it is what it is, unfortunately.
Well, I mean, I'm sorry, go ahead.
Go ahead, Ron.
I want to be hesitant, but I think that this is the scenario that I see is that we're heading for stagflation. Right, we're going to have economic decline with continuing inflation issues, especially if the Fed has to print money. Right, they're making these banks whole. The banks are going to think, hey, we can continue creating money, lending, and we can increase the money supply, and inflation can, the Fed's going to bail us out. They've got our back. So we can be careless and reckless with how we do our lending. But effectively, the Federal Reserve has two tools, basically, and the main one is raising interest rates, right? And that is to quash demand. The higher money costs for you to borrow, then the fewer things you're going to be buying. Everybody knows that. If you want to buy a house at 7% interest, it's going to be a huge payment, right? But everybody was buying them at 3%, and so they could afford that payment. Now they can't. So the Fed does not want to lower interest rates because that will spur inflation again. It's already hot. The jobs data is hot. It's a lagging indicator, so we may see now we're seeing a lot of layoffs in the technology sector. Probably going to see more now that SVB has gone down. I mean, Roku. People use Roku. I used it. Yeah, 25% of all their cash locked up in SVB. So can you imagine what that would have been like for their financials if their money had just gone poof? So, but there's going to be a lot more diversification, I think, now in trying to spread money around. But the Fed's sitting here, they got to either save the dollar. The Fed either has to save the dollar or, fighting inflation. They need the dollar strong to be able to keep commodity prices low and to quash demand. To keep, CPI low. The higher the dollar is, the more pressure it puts on inflation. So they need the dollar to be strong, but then again, they're putting at risk the financial system and the banks. So they're going to have to make a choice.
Well, I don't know how they're going to do it, because we were even talking about during Trump administration that, the last thing that is left to what the Fed could do, maybe a devaluation of the dollar. Unfortunately, I hope we don't have to get there. If we do get there, then we're in a heap load of trouble. I do have a video I'm going to follow up based on a discussion that took place as to where we are with the other banking requirements. And then, so we'll play the video for now.
HSBC acquires Silicon Valley Bank UK. So instead of going to one of the other startup options in the UK financial tech landscape, we see this going to the one of the much bigger established players. So HSBC acquire Silicon Valley Bank UK. This was after reports suggesting that others in the sector were also looking at making offers, smaller players mainly. So interesting to see HSBC winning out here. The transaction completes immediately. We hear from HSBC. Acquisition will be funded from existing resources. The acquisition will be funded, yes, as I say, from existing resources. The UK government is also giving some lines here saying that customer deposits are to be protected. So this echoing movement that we've had in the United States, where they've fully protected all depositors' money at SVB and Signature Bank, which was also closed, of course. Now the UK government saying that its customer deposits will be protected. The UK government also, as the US has said, no taxpayer money involved in SVB UK. So interesting that both of those governments needing to put that particular political line on things, and the UK saying that SVB UK customers are able to access their deposits and conduct their banking as normal. Now this deal with HSBC has been done.
Yeah, it's a shame, but I mean, yeah,
£1.
There you go, £1, and they buy the bank.
$1.21.
We saw this because of the SVB's connections to China and what China is trying
and
to
the
do
WEF.
now. And the W World Economic Forum. So these are some of the issues you're running into. And frankly, you see on the geostrategic level, when China is able to step in and try to broker a deal between Iran and Saudi Arabia, they're not breaking a deal for them to love each other. They're doing it because of economic reasons. And the energy sector, which is probably going to freaking absolutely explode come middle of the summer. And unfortunately, even with the SecDef going to Iraq just this past couple of days, now I think what ends up happening with him traveling there, traveling to Syria, and then of course to Israel, it might be to where now we're stuck in a position that we may have to ease sanctions on Iranian oil in order to be able to help the market out, in order to ensure that our banking systems are not just collapsing globally. What's your take of what is happening and what China is doing and others to position themselves in a unique position to be able to really kind of hold the U.S. economically hostage?
Well, I think you're absolutely right. I mean, there's a huge benefit if China can be seen as a peacemaker in the Middle East and pull those players away from the United States orbit. But how successful they'll be, who knows? I mean, China's demands for petroleum seem to be decreasing because of their economy going down, but they obviously still want to lock those in for future availability. But there's also the issue, China has a lot of debt out to Pakistan, and Pakistan is on its, it's in an inflationary spiral, and its cash reserves going down. It's one of those countries that people fear is going to fail first, and it'll be a huge hit, primarily to China, because they've been one of the largest investors in that country. So Indonesia is another one. I'll give you some of this. It's not really been reported, but a friend of mine, who's a former banker here, he's been trying to educate me on some of the politics here in Indonesia. And Indonesia is a hugely strategic country because all this oil going to China and Japan, it goes right through the Malacca Straits between Sumatra and Singapore. It's a huge choke point, and it's all controlled by Indonesia and Singapore. So he said that the U.S. ambassador here just met with one of the more hardline party members, I believe a hardline Muslim party member. And he was like, why are we doing this? Why are we undermining moderation by meeting with these hardliners in Indonesia? And it makes me wonder if by doing that, we're trying to get some influence over there in Saudi Arabia, because Indonesia is the most populous Muslim country in the world. 80% of 300 million people in this country are Muslim. So the population is far higher than any other Muslim country.
Well, Malacca Straits, as you know, what gives us our strategic advantage against China. I mean, if China breaks out by going into Taiwan and basically all those island chains are basically broken, you're not getting those back. And that's why China's conglomerates countering American economic realities were in Burma. And I said that, years ago before the coup took place, where they were trying to eye the possibility of getting into those naval shipping lanes in order to bring everything in the Arakan region to basically pump it directly from there, from the Middle East to China, or ship it to the Middle East as it was required. The banking issue has, again, really put us in a bind because of what they've been trying to do. And it doesn't help the fact that our internal struggles that we thought we had finally resolved from going back almost a decade from when the fall took place to where we are today, seem that we still haven't learned. And unfortunately, I don't know if this bailout is going to be good for the United States in the long run. I know that BlackRock has taken a hit, and a lot of the union pensions here are tied directly through BlackRock that is managing them. What's your take on what's happening there? Do you think that would be leveraged by China at all?
Sure it can be, but I'm sorry for a lot of these union people that are involved with BlackRock, but you know how I feel about the World Economic Forum. They're a neo-feudalistic global techno monarchy. They wish to, turn us all into serfs, and they're now techno royalty. That's my view, and I'm sorry, it's a little biased on my part. But Larry Fink is a big player in the World Economic Forum and spreading ESG, environmental sustainment policies that are just devastating countries like Sri Lanka. So I've got it's systemically important, but I'd rather see the money go somewhere else and get out of BlackRock and go into something that's actually makes more sense.
Do you think WEF's financial plans or what they were trying to do has any type of an effects on what was happening with our banking systems here? Was there a give and take or a struggle that may have put the Fed in a position that it was today, trying to counter maybe what they were trying to influence in the U.S.?
Yeah, it's always kind of a thought in my head. I mean, the mantra is "Build Back Better." That's the WEF's mantra. That's Joe Biden's mantra, and effectively it tells you, Biden has been captured. This country's government has been captured by WEF policies, which are not in the interest of the American people, let alone any other people across the world. So, do I really think? I think that SVB was heavily involved with, Silicon Valley Bank was heavily involved with the World Economic Forum and their environmental sustainment policies. If we destroy a country's energy independence, as they've effectively tried to do with the United States, then fine. Then, we have to have cheap energy to be able to grow our economy. And if they want to make everything more expensive with windmills, I don't think any of us are against pollution, against clean up pollution. But when you've got bad science guiding these economic policies, and China is exempt from them, we have to abide by them, but China does not until 2030. What is that going to do to us economically? It gives them an advantage over us. So.
Well, look, I mean, oil was at 71. It came up to 74. I know that in the summer, there's going to be a high demand. If China is now back online again and they're looking for diesel, imagine what could happen economically. And I don't know if it can sustain. I think there's a reason why the POTUS decided to finally give in and say, okay, we're going to have to be able to pull oil out of Alaska, but we'll see how it turns out. I do want to take a look at what's happening with the impacts on another piece, which is the cryptocurrency world, and then kind of get your thoughts as far as how this particular banking collapse is affecting the crypto world, which some of it, as far as the exchanges are concerned, are really kind of tied to the US dollar. So we'll go ahead and play that video and then come back and get your thoughts.
what's going on when it comes to Signature Bank. We know that this is a key intermediary between cryptos and fiat currency. Belle, this is kind of, we bring this together in terms of the jigsaw of what happened to SVB and, of course, the impact of Silvercrest.
Yeah, that's right. So you had what's really interesting is when you put it all into comparison here. So SVB and Silvergate, they are two banks that both of those had concentration risk, because while Silvergate was focusing on the crypto world, SVB was focusing on the VC world. Now, essentially what's happened is we have another bank, Signature Bank, which was really seen as being perhaps the key bank, as you said, Heidi, the intermediary between the fiat world and also traditional finance. This is how crypto players could get their money on and off exchanges here. Now, it was seen as sort of perhaps not so much as a winner, but really the last bank standing for the crypto world after the collapse of Silvergate. But Signature Bank rather, had already taken steps to try and protect themselves from all the fluctuations in the crypto sector, because they had reduced the amount of crypto deposits they were holding to around 23%. However, that has not stopped what we're just hearing now, that essentially it is now being taken in possession. And we do have a statement coming out from the Department of Financial Services. They're essentially saying that the New York Department of Financial Services has now taken possession of Signature Bank, and that is pursuant to Section 606 of New York banking law. And the move really, again, as we're hearing, it's about protecting depositors here. So the FDIC now appointed as receiver of the bank. Signature Bank, it is a New York State chartered commercial bank. It is FDIC insured here. Total assets are around $110 billion. Total deposits around $88 billion. But certainly this is a hugely developing story. It has a lot of ramifications for the crypto world and also for stable coins as well, Sherry.
Belle, you said it, right? I mean, a lot to do with just backstopping all of this contagion fears in the banking sector right now. And we're hearing from a bunch of U.S. regulators, whether it's FDIC, the Treasury, the Fed, also coming out with actions in the wake of what's happening with not only Signature Bank, but SVB as well. And just as Heidi mentioned, that SVB depositors will have access to all of their money on Monday. How much does this really change that risk sentiment in the markets?
I can only see it really just extending throughout the session, Sherry, because there is so much uncertainty around this, and it does perhaps point to a deterioration of the credit conditions, which is obviously something that's closely watched. Would it really change the calculus for a Fed rate decision? Not necessarily. Perhaps a smaller hike still in order here, but certainly it's going to be very closely watched by the crypto sector, because there's still a lot of unknowns here. Something a lot of people are going to be watching today is what happens, for instance, for stable coins, because this is now, again, a very key intermediary between the fiat and the crypto world, a way that people can access and move money around exchanges. But a lot of these were holding deposits at banks like Signature, Silvergate. A lot of things that still need to be unraveled in this area.
Right. What's important in that, I think it was a wonderful video to kind of look at, is that a lot of people don't know. They think, well, okay, banks are failing, I'm going to go put my stuff in crypto. Well, the exchanges are still tied to the banking. So you may give your money there, but they have to put their money somewhere. And then now if you're talking about the US dollar, imagine what happens. So the perfect storm that we're dealing with right now is these regional banks failing. You don't know if you can bail them out or not. It's in the billions to bail out just one bank. And then on the other back end, you see where the regulators, since the FTX collapse, are now going hard after all these exchanges. And now, guess what? We have this issue that we got to deal with. If you could kind of let our viewers know, how did that FTX issue lead to where we are today? And if you're giving advice, as you have done, and you've done it overseas, on the market issues, how do you deal with this particular situation now, especially if you're looking at the crypto side of the house?
I'm not really a crypto player. I do watch it. I watch the markets. I try to understand it. Never trusted it, but I had a huge opportunity cost, and a good friend of mine made a small fortune off of it, and he tried to get me in, and I didn't do it. So that's my history on it. But I do watch the stable coins, because those are very critical. If you're going to play any crypto other than Bitcoin, and even Bitcoin itself, you have to have an exchange. You have to be able to convert your Ethereum or whatever your crypto is back into some kind of instrument that's pegged to the dollar so you can go and get your dollars back out. Now, Bitcoin does have that ability. You can put it in an electronic wallet. You can even carry it with you. And you can exchange that separately. I don't think you have to have one of these stablecoin exchanges. That just makes it more convenient. But if you have your Bitcoin sitting anywhere on an exchange, you're looking to have it confiscated and disappear. So
it's amazing. I can't believe it. And people say that these individuals who have created this system are going to save the globe from a financial collapse. You can't even save one bank. How are you going to be able to save the globe itself?
the only way the Fed can do it is it has to lower rates. It has to lower rates and recognize. I mean, it's going to have to suck up the inflation issue. There's going to be inflation. It's stagflation. They've got to lower rates to bring some of these unrealized losses down to a acceptable level on the banks. I'm saying that 630 billion in unrealized losses, the Fed can't handle that, and these banks can't handle that. Their earnings are going to drop dramatically. That's going to impact their stock prices and their liquidity. So the Fed needs to bring the rates down, probably at least 1 or 2 basis points, down to maybe 3%, and give the banks some cushion on these unrealized losses.
What would happen if they decide to go opposite? If the grown-ups say it doesn't matter, long term we got to go up, and they decide to go. I mean, some people have talked about a quarter. I told you the crazy portion of it would be people have said if you really wanted to stop this from happening, the inflation, you had to go up almost 75, which is insane in today's discussion. But what would happen besides unemployment going up if they go up 25 from your perspective globally?
I don't know if you caught the other day, Joe Kennedy who was he interviewing again? I'm trying to remember. It was, the Fed, Chairman Powell. And he was asking him about, to get the interest rates up high enough to quash inflation, you're probably going to have to raise unemployment to the 10% level. And that just got, a lot of people shaking their head, but it's not far from the truth. You've got to quash demand to bring inflation down. You've got to quash expectations. You have to break something, and that's what the Fed doesn't want to say, but it's what they have to do. And so if we see inflation still trending at 6.5%, they're going to be under a lot of pressure to keep the interest rates higher for longer until that CPI rate comes down to a manageable level. And that's stagflation, because the economy is going to now go down because the banking system is fragile. Who's going to be loaning money? You don't have GDP growth unless banks are lending. And if banks aren't lending because they have capital constraints, a lot of people don't understand that's how money is created. The money supply is created when you go in and you take out a loan. You're creating money. And when you pay that loan off, you're destroying it. So it's the economy is kind of like a leaking tire. You've got to put more air into that tire than is leaking out. Right? So if you have a tire with a constant leak on it, you got to be pumping it up. And when you overpump it, sometimes you got to let that air leak out to bring it back. It's
amazing. All this because you can get a politician to stop spending money he didn't have. We wouldn't have these issues.
Bingo. Yeah,
with that said,
that's a big part of it.
We got to take a short break from our sponsor, and then we come back. I'm going to look at some of the issues that are being affected on other global banks that we never thought would be touched.
Yeah.
We are being censored. America's news outlets no longer provide the truth. 90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. The Epoch Times is independent. We're not controlled by any special interest, and we never will be. This is a battle between truth and deceit, a battle between forces that would ensnare this country in ignorance, and between a media that wants to present you with the truth. Subscribe today to our digital edition at theepochtimes.com and join the Americans who are seeking truth and tradition. Read the difference in all your devices. We'd love to have you on board.
Ron, I do want to let people know again that you're coming live to us from Indonesia. So, I love doing these live shows. In Indonesia, we deal with the chirping birds, and where were we? We're in Vietnam. We were dealing with we're in Vietnam. We're dealing with the rooster. But God bless, they always bring us good luck at our shows.
Yeah.
But I do want to kind of go back to what's happening. Even the Swiss banking is being affected now. I do have a video. I'm going to look at what's happening within Europe and then get your thoughts on.
Credit Suisse shares have slumped to another intraday record low. That's after Reuters reported that Switzerland's financial regulator is reviewing comments that Chairman Axel Lehmann made about outflows in an interview with us back in December. Here's what he said then.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
So what do we know? What more do we know now about this probe, Tom?
Yeah, it's early days. I mean, basically Reuters were reporting that FINRA, the Swiss regulator, is effectively looking at those comments we've just heard. And the nub of the issue appears to be effectively some months after he made those comments, those outflows did continue. And of course, in between that period, Credit Suisse was out there raising money. So very early days, not clear yet whether this will be a formal probe. It's just questions. But obviously Credit Suisse investors not liking the look of it.
Yeah, it's amazing. I mean, me and you were talking just months ago. I have email exchanges between Credit Suisse and us because we're trying to do, international banking on other issues. And lo and behold, here you go. So, I mean, it affects you everywhere. Do you think that this is going to end up badly for Credit Suisse and other possible European banking, especially with what's happening with the euro now?
Yeah, I mean, that's kind of the, I consider it the 800-pound gorilla in the living room globally. One of the things we've seen, and I give a lot of credit to analysts like Jeff Schneider who cover euro-dollar markets, because that's a leading indicator, and that's a market that the Federal Reserve cannot control. Euro dollars are any U.S. dollar denominated assets that are outside of the United States. And they've been indicating what they call an inverted yield curve, very strong one, which means effectively people are scared. I mean, it's complex to explain. It's just basically you can't loan money out in euro dollars because everybody's going for safety of the long term, and those rates are lower than the short term rates. But effectively, it means that it's predicting a global recession. And now it's starting to catch up to where the United States rates are inverted as well, very heavily, very strongly. Again, indicating a recession. Lending is going to decrease and go down. Credit Suisse, they've got, I saw a report the other day, in February, they had reduced their exposure of derivatives. And derivatives are effectively a financial instrument that derives its value from the underlying asset. So if you have your house has a certain value. The mortgage is a derivative of the value of your house. That's the easy way for people to understand that. Options, futures markets, all of these are derivatives of underlying assets. Credit Suisse had dropped 22% of their portfolio of derivatives based upon outflows of capital from their bank in February. That was their response. 22% of their total package of derivatives portfolio was $202 billion. That means they've got $800 billion still sitting there that have to be unwound and sold off, or if they last, they wind off after they mature. That's a huge amount of money, $800 billion. And it's like a domino. That domino falls, it can cause so many other dominoes to fall. Banks don't want to trust each other. They don't want to lend to each other. So, yeah, we can very, very quickly see a global meltdown in the financing system if Credit Suisse goes belly up. And Switzerland can't bail them out. They're not big enough.
No, they can't. No, they can't. I don't know.
And nor should they.
I'm sure that the U.S. will find taxpayer money to go there and try to bail them out. Too, right?
Some believe we already did it. Yeah, I mean, in November we had $11 billion currency swap where we swapped Swiss francs for U.S. dollars. Okay,
Yeah.
and apparently some people believe that was used to backstop Credit Suisse. So, but there are it's been an issue for decades. There are a huge number of derivatives out there. People borrowing money and then relending that money to someone else who then reloans that money. It's called rehypothecation. Anyone in that chain of lending decides they can't pay you back, then you've got everybody scrambling. So you're going to have loan defaults just like a cascade of dominoes. So that's been the real fear with Credit Suisse from my research. And so everything I know I've gotten, other people have basically taught me.
Listen, that's the way it works. You got to gather some knowledge. Right?
That's where it works. That's right. That's right. Connect the dots.
It takes years to study it before you could act on it. But I was going to say that one of the problems that we run into on the global level is you saw with what happened with the central bank of Iraq, basically saying we're going to go with the yuan and we're going to drop the dollar. Now, the head of the central bank of Iraq was replaced by the prime minister, especially with the SecDef showing up at the doorsteps. But where is China here as far as how much U.S. dollar is under their control? And can it be used, or how would it be used from your perspective by them to leverage both in Africa and also the Middle East and the rest of the world?
Well, for China, I think the issue, they do have a substantial amount of money tied up in U.S. treasuries. But they're also getting a higher yield now, I would assume, from many of those treasuries than they were receiving than they could receive in China, especially when you figure currency fluctuations between the U.S. dollar. Kind of complex. Dollar goes up, your value of your bond goes up. But everybody's talking about China and Russia wanting to replace the U.S. dollar. I don't foresee it. The yuan is not tradable. They set the value of the yuan, with no market forces behind it. Every day they set an exchange rate of the yuan. My friend has told me that here in Indonesia, they've been talking about doing some kind of coordination between the Indonesian rupiah and Chinese yuan. And I'm like, why would you want to convert rupiah into a currency that's not exchangeable? I mean, Mark Mobius, who is one of the greatest, investors, they claim, billionaire, Southeast Asian tiger investor, he can't get his money out of China. That was a big story on Zero Hedge the other day. He can't get his money out of China. And then China says, oh, no, that's not true. But apparently he has to account for all of the profits he's made over the last 20 years and for him to be able to pull any of it out of China. Who wants to invest there? Who wants to put money there? We've got our pension funds that are invested in a lot of Chinese assets. So I don't see it. And going to gold.
And the Chinese have picked up a lot of our money that has been invested, especially union dollars, and they have gone ahead and built these huge cities that they say are valued this much. Nobody's living in those homes in China. And one day when it comes out to, they can say, well, nobody wanted to buy them. The price of the housing has collapsed in China. And by the way, guess what? Union guy who you were voting for the current administration, now here's $10 that you get out of all your hard work over the years, because that's the only thing that's left of your pension. And I don't think our folks in the United States really realize how bad it can get and how bad it might get. I do know we have a video I want to show you about what lessons were learned. We taught a decade ago But unfortunately, I don't think we learned those. And then we'll come back and see, is it a possibility that we may be at those levels in the future?
Global worries stemming from that financial crisis in the Mediterranean nation of Cyprus.
Now, that's stocks sliding across Asia this morning, and it was a major reason for the Dow's 90-point skid yesterday. ABC's Nick Schifrin is in Cyprus, where worry and anger is rampant.
Cyprus is nearly broke, and the social fabric is beginning to tear. Bank workers worried about their future blocked access to parliament. Lawmakers had to be lifted over the barricades. Outside the banks, the lines are long, customers worried.
You don't have cash now, can't do anything.
The banks haven't opened for 7 days, so Cyprus is becoming a cash society, and yet it's hard to get cash.
No accounts, no cards, no nothing.
And so what will they do?
God knows. Suicide.
Increasingly, this is happening.
What happened? There's no money. I mean, I couldn't get any money out, and then my card won't come out.
That's the nightmare that so many are facing.
You had a problem with this bank as well?
We walked with her to the next ATM.
And psychologically, how much of an impact has this had?
Well, we feel so insecure. We feel very insecure.
Luckily, she got cash.
Does it feel like a relief?
Of course it does. Of course it does. Unfortunately, our lives depend on money these days, don't they?
Her life and her daughter's. Like so many young Cypriots, she lost her job, so she's moved back home.
I think this is going to be a very big shock, and people will be left with nothing.
The politicians need to secure a $20 billion loan to save the country. If there's no bailout by Monday, these banks may never reopen. Nick Schifrin, ABC News, Nicosia, Cyprus.
I mean, it was a long time ago what happened, but I mean, I guess my question
Still
to you
relevant.
would be, yeah, it's relevant. Did you learn any lessons from that? And how do we apply that to regulations we're dealing with? Sometimes you feel like there's 3-year-olds running around Washington rather than any adults in the room. But what's your take? Where are we right now?
Well, you're seeing panic right now. Look, the analysts are out there. They're selling the stocks and the banks because they see these unrealized losses they're facing. Nobody's given a solution. The Federal Reserve and the Treasury have not provided a viable solution to mitigate or compensate for these unrealized losses on assets that they cannot sell. Nobody wants to buy. There's an illiquid market. Usually the Federal Reserve would come in and make that market liquid by sopping it up. But they've created the problem, and they're not providing the resolution to it. So you're going to see the banking sector suffer further. I hear some rumors that you may see that also in some of the brokerage accounts, like Charles Schwab is under a lot of pressure. So I don't know where this all ends. It's going to have to end with somebody saying, hey, we're going to guarantee, we're going to backstop, decrease the fear. Because we don't have enough money, enough cash in the system, and most people should know this. There's not enough cash in the financial system to give everybody, 100% of their accounts. There's just not, and that creates bank runs. And this will be a global problem. It's just a matter when the tide starts to sweep over, not the tide, the tsunami starts to sweep around the world, and I think you're going to see that. But
Ron, let me ask you a question. Do you think the dollar devaluation will come whether we like it or not, or does it have to be done in order to be able to save us?
I watch the dollar every day. I'm watching it like a hawk. The DXY, which is call it an instrument that basically you can't trade it. At least I can't. But you watch it in comparison to other currencies like the Japanese yen, the British pound. If their currencies are going down, the dollar's going up. And so UUP is another one that I watch. It's the dollar exchange traded fund, ETF. And I'll tell you what, if it goes much higher, we're going to see a major breakout in the dollar. And it may happen because as we go into a recession, there's a lot of debt out there. You got to pay debt off, right? It's still, I mean, you don't have to. I guess you can default on it, but it doesn't matter. The money is still destroyed. And that causes assets to lose value. Gold is going to be one of those. Gold will do well at some point when the Federal Reserve starts inflating again. But right now we're in deflation. It's just stagflation at this moment. And then eventually the economy declines to such an extent that we're now, no doubt about it, we're in a major recession, if not / depression. And because this is global, I think we're looking at a depression. The signs are out there from the global side. That's what my gut tells me. So I wish I could say, I look, again, going back to Credit Suisse, there's these little obscure things called credit default swaps. And they are at the highest level they've ever been on Credit Suisse. And credit default swaps are like insurance. I take out an insurance policy on whether your house burns down or not. All right. I don't have to have any equity value in your house. I'm just taking out and betting that your house is going to burn down. And then I've got a vested interest to make sure that your house does burn down. Now, don't I? To get paid off. And that's what a credit default swap is. And people have warned about them for years, and they are going to, some entities make a lot of writing the policy, like an insurance company. They write the credit default swap, sell it to somebody, they collect the premium. And it's like a Ponzi scheme. As long as everything's going well, they're collecting free money because somebody's just betting that a certain entity, a bank, will go belly up, and then they're going to make a fortune on the credit default swaps. So, but they shouldn't be allowed to bet on something that they don't own money in or don't have an investment in. That's short example on that.
Yeah, we could clean those up, but politicians have to be willing to do it, and a lot of them don't even know anything about what you just talked about.
Yep, exactly. I didn't know about it. Until about 20 years ago, and it blew my mind when I heard about it and read about it and said, "Oh my God!" I still don't play them. That's something I don't really get into that aspect of it, but it's there. You have to watch it. And Credit Suisse having the highest credit default swaps, that's blood in the streets. No, something's going to break.
That's not a good indication that we're going to be in a good place. Well, we have a few minutes left. I do want to get your closing thoughts before we close out the show. But how would you fix it in a short? Or where do you think we might be a couple of months from now?
Well, the Fed's looking for an excuse to lower rates, but they can't. If they do, they lose credibility. So tomorrow morning is going to be a very critical data point with the CPI. And who knows if they juggle it or manipulate it or whatever to give them the answer that they want. That gives them the excuse to lower rates. But the jobs data, as long as the jobs data is still coming in hot, that's kind of hard to manipulate. It's there. They need unemployment to come up. Believe it. They didn't want to say it in the congressional meeting, but unemployment needs to come up. Demand needs to come down and get this economy into a balance between supply and demand. So to get inflation down. And I don't know, it's going to take interest rates at a higher level to accomplish that. I think they've got to break something. I hate to say that, but they have to make it happen. So people stop playing Las Vegas stock market, strategies.
Yeah, unfortunately, we got to be cheering for people to be unemployed for us to be able to make sure we save the economy. But it's a reality.
Just remember, we got to build back. You got to build back better, according to Klaus Schwab. And if you build back better, that means you got to destroy everything that currently exists. That's one of the things I kind of look at, and I think you never know. I don't have. I hate to be conspiratorial, but you take 6 months, a conspiracy turns into real fact.
Listen, it's all about money. And these people have invested their reputation and dollars into things, and they're not going to give it up. And they could care less what happens to you or me in the long run.
We will own nothing, and they will own everything.
That's it. And we got the money, and we got the property. Welcome to reality of life. Ron, it's great to have you here. I did want to take some time to have this discussion. I know you're in Asia right now watching because both you and me have talked about it. I know you're doing your assessment there because we knew Africa 2 years ago when I landed in Africa. Nobody was looking at it, and now even Joe Biden's going to Africa. We knew Africa was going to be key, especially to the minerals, and we know that Asia over the next 20 years, next 2 decades, is going to say what the U.S. is going to be, if it's even going to be a player, not just globally, player at any level. So we'll see how it goes, and come back and let us know what the assessment is there. And for our viewers out there, if you do like the type of programming we do, we are raising money for United Assyrian Appeal, which we help the Christians of the Near East and adjacent countries. And all this global turmoil is affecting everything. And now imagine the number of refugees you have to deal with. I was recently on an interview talking about Africa, and I said once China takes over Africa economically, they're going to start using the ethnic cleansing that you and me are aware of how they did move the conglomerates into Burma, really using the military forces. And once, hey, you take over the economy, guess what? Then you elect the politicians. You elect the politicians, they turn around and elect who the military guys are that are going to be serving as generals in their military, and then they turn around and basically strike the military alliances that take us to war in the future. Also, I want to thank really Sim Production for giving us the opportunities. These live shows are not easy, but I got to tell you, you probably had one of the best feeds video-wise than we could have ever established. So God bless, they're doing something right in Indonesia, and thanks for Fred and Sim Production for giving us this opportunity. Ron, that's it for us. Any last piece of advice for Americans out there today before they wake up in the morning?
You know, I can't give advice as a financial advisor, but I can say, if you can, diversify your funds. Right now, they're probably going to be hesitant about you taking out large quantities of funds from your, in cash. You might think about a cashier's check. I don't know how valuable those would be. That's just something I thought about. But diversify and get yourself out of debt, because I think we're into some rough times in the coming months, unfortunately. So,
unfortunately. Thank you, Ron. Much appreciated. God bless. And
thank you,
to our
Sargis.
viewers. No, definitely. Anytime, man. And this is New Paradigms. God bless.
We are being censored. America's news outlets no longer provide the truth. 90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. The Epoch Times is independent. We're not controlled by any special interest, and we never will be. This is a battle between truth and deceit, a battle between forces that would ensnare this country in ignorance, and between a media that wants to present you with the truth. Subscribe today to our digital edition at theepochtimes.com and join the Americans who are seeking truth and tradition. Read the difference on all your devices. We'd love to have you on board.